Welcome, everyone. Thanks for joining me today. Today, we're actually going to be talking about cash flow. With the holiday season approaching, it's vital to stay diligent about your finances and your cash flow. In fact, Proverbs 27:23 tells us to know the state of our resources and manage them well. During this busy season like the holidays, we'll discuss how Shopify store owners and Shopify sellers can apply this principle, focusing on cash flow. Today, we'll provide actual steps to manage your cash flow with confidence. So let's dive right in. My name's Jacob Curtis. I'm a CPA, a certified profit first professional, and a business coach. I started Curtis Accounting Solutions to remove the stress of doing bookkeeping, payroll, and taxes, and to provide practical business advice that helps Shopify stores and e-commerce stores piece together financial freedom. I'd love to hear your thoughts and questions on today's episode, so please leave a comment below, and remember to like, share, follow, and subscribe. The holiday season often brings increased sales and profit potential, but also rising costs in marketing, inventory, and even staffing. Without practical management, high demand can turn into high stress and strain. Let's look at each piece so that the increased holiday cash flow becomes a strong profit center for you. Number one is you want to assess your sales history. Start by analyzing your Shopify data from last year to get a baseline for the holiday sales and expenses. Two is to estimate added costs, calculating expected costs for shipping, marketing, inventory, projects, and that are all based on the projected sales volume for the holiday season. And number three is to set some revenue goals. Using the past performances as indicators, set a clear revenue target to help you manage your costs effectively. In fact, forecasting based on historical data sets realistic expectations. Estimate expenses such as additional inventory, marketing, and even extra labor as they relate to projected sales. So again, you want to gather that sales data, export last year's holiday season sales from Shopify's dashboard for a benchmark. Estimate those inventory costs, calculate the cost of goods sold based on the sales growth that you expect this year. For example, if last year's inventory cost was $5,000 for the season and you expect a 30% increase in sales, inventory costs might increase to like $6,500. Budget for marketing and shipping. Allocate a percentage of that forecasted revenue to cover those increased marketing and shipping expenses. And then finally, set a buffer. Set up like a 10% buffer for unexpected expenses that come up that you're not aware of, just to help keep that cash flow stable, even if costs rise unexpectedly. Effective holiday promotions drive sales and increase cash flow, but they should also be strategic. Plan promotions around high-margin products and set clear spending caps on ads. For example, what you want to do is you want to select high-margin items. So identify those products with the highest profit margins and prioritize these promotions. You want to set some discount limits. Keep discounts within a profitable range. No more than, say, 20% off items that have a 60% margin. And then you want to calculate those break-even sales based on your sales volumes, including those extra discounts. So calculate that minimum number of units and sales you need to sell to cover the ad spend and to generate a profit. And finally, establish some ad spending caps, right? Set up a daily or weekly cap on ad spend to prevent overspending and keep cash flow coming in positive. Monitoring your cash flow in real time is essential during these peak times. Shopify's analytics give you daily insights on revenue, costs, and inventory if you're including those in the Shopify data. So set up dashboard alerts, enable alerts for metrics like daily sales, cost of goods sold, and other expenses. Next thing you want to do is actually track those metrics, not just have alerts, but actually start tracking those metrics every single day. Focusing on revenue to begin with, but also then including ad spend and other top performing kind of products. Adjust those promotions if necessary. If sales are high, but cash flow is low, consider reducing ad spend or focusing on organic marketing efforts to stabilize your finances. And number four is to remember to stay flexible. By staying flexible, you can react to trends quickly. If a product is selling faster than expected, prioritize restocking or reduce discounts to maintain that inventory. Now, inventory planning is all about balance. Running out of stock can be just as damaging as overstocking your inventory, which again, both ties up cash that can be used elsewhere. So analyze last year's sales, identify those products that sold best last year, and focus on those through this coming year. Calculate your inventory needs, project how many units you're going to need of each product or product line that you're going to need based on your sales forecasts, which are again based on last year's data and what you expect this year. Allocate your open to buy budget. So allocate a budget for unplanned demand to avoid overcommitting cash on less popular items. And then finally, plan for reordering. Set aside 10 to 15% of your inventory budget to reorder fast moving items as needed. Separating funds for specific needs like inventory, taxes, and profits also helps ensure cash flow stays healthy. Profit first approach is an excellent way to manage these allocations. Divide up your income by percentages. For example, allocate 40% of each sale to inventory if you've got that kind of a margin, and then allocate 10% for taxes and 5% to profit, and so on. Open up separate bank accounts. Use dedicated bank accounts to help you track various categories of your business easily. For example, you may want to have a profit account and a inventory account and a sales tax account and an owner's comp account and then an operating account. And finally, review these on a weekly, if not at least a weekly basis, but review these on a every other week, at least monthly kind of basis to ensure that your allocations are accurate, and then make adjustments as needed. And when those adjustments are needed, make sure you're reallocating when you need to. If sales are higher than expected, increase allocations proportionally to keep everything kind of balanced and running optimally. Negotiating extended payment terms with vendors can be a huge cash flow advantage. Aligning payment due dates with expected holiday sales allows you to make payments from revenue instead of dipping into your reserves. So you need to identify your key suppliers, list out who your suppliers are, how much you spend with them, and prioritize them for negotiations. Request extended terms. Politely ask for extended payment terms such as net 40 or net 45 or net 60 terms to give you some flexibility with your cash flow. And then provide projections if needed. This is going to be huge. Some vendors may agree to terms if you can provide them and show them some forecasted sales volume that's backed up historically with your data. And then finally, you'll have that negotiation. You can negotiate incrementally, a little bit at a time. If a full extension isn't possible, ask for incremental extensions or discounts on bulk orders. Seasonal staff helps meet demand that may be happening, but carefully planning out staff levels ensures labor costs stay manageable. Flexible staffing also allows you to scale with sales volume. So you need to estimate your demand increased. How much are your expected sales estimated to increase your staffing needs? Budget for part-time roles. Determine if part-time staff can even meet those demands and help balance the costs with other potential revenue. Hire a flexible contractor or part-timers. Use flexible contracts to let you adjust hours and roles based on actual sales volume. And then monitor this weekly. Track weekly sales against the staffing needs to avoid excess costs with labor and staffing. Reinvesting holiday profits thoughtfully can actually set you up for long-term success. The priority should be on restocking top sellers, developing new products, and building reserves for future opportunities. So identify your best sellers. Use that holiday sales data to pinpoint the products with the highest profit margins and prioritize those. Reinvest in inventory. Allocate a portion of the profits to restock these items and buy materials for those really popular items. Set aside some funds for new product testing and have a little bit of some experimental funds available. Use a percentage of the profit to test and or develop new products for Q1. And then finally, build up a cash reserve. Set aside 5 to 10% of the holiday profits as a reserve to manage the cash flow in summer months, kind of like a slower month fund. After the holidays, reviewing your financial reports gives you the insights into what went well and what could be improved. A thorough review is essential to understand your profits and your performance fully. So run a post-holiday profit and loss report, compare expected numbers against the actual numbers, and assess the overall performance of this holiday season. Evaluate again the top performing products, identify those products with the highest returns, and consider expanding these throughout the year and into the next season. And also look for areas that you can use for cost reduction. Look for any high cost areas like shipping or ad spend or something else that could be streamlined next year. And then document your findings for the next year. Keep a record of the lessons learned for better planning and understanding and following through on the next holiday season. Managing holiday cash flow is a proactive approach that sets your business up for success. Each strategy, from forecasting to reviewing, plays a critical role in turning holiday demand into profit and sustainable growth. So, if you have questions or need assistance with managing your company's finances, don't hesitate to reach out to me. I'm here to help you piece together financial freedom. You can schedule a call with me by scanning the QR code on the screen or going to jacobcurtiscpa.com shopify.com/5-strategies-calendar to get started. And remember, follow me, Jake Curtis, CPA and Curtis Accounting Solutions on Facebook, Instagram, Pinterest, and YouTube. Thanks so much for watching, and we'll talk to you soon.